We just got the FOMC minutes report, and it seems to be a little bit on the bullish side. There was good and bad that was said, like the Fed did acknowledge that asset values remain elevated, which is initially what took the markets down in these big candles. And then what actually came out in the report is that the Fed wants to go super fast right now to get rates high so then they can essentially pivot later in the year and reevaluate economic conditions. So that's the long story short. We are going to go ahead and read exactly what was said because I don't really expect a huge move by the end of the day today, by the next hour or so, but I do expect a bigger move tomorrow, and I think ultimately it will be a bullish thing. So let's get into all of this key information. Then we're going to dive into everything you guys need to know about our favorite stock. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys do want to support the channel and join the journey with us, link down below for the Patreon. Go ahead and check that out and get yourself those free stocks. Webull, Moomoo, and Public down below in the description of this video. But nonetheless, let's get into exactly what was said. So this is the main article right now on CNBC, and they paint it in a very bad light. It says Fed minutes point to more rate hikes quicker than the market anticipates. It says Federal Reserve officials earlier this month stressed the need to raise interest rates quickly and possibly more than markets anticipate to tackle a burgeoning inflation problem. Meeting minutes released Wednesday showed. Not only did policymakers see the need to raise benchmark borrowing rates by 50 basis points, but they also said similar hikes would be necessary at the next several meetings. They further noted that policy may have to move past a neutral stance where it is neither supportive nor restrictive of growth, an important consideration for central bankers that could echo through the economy. Quote, most participants judged that 50 basis point increases in the target range would likely be appropriate at the next couple of meetings, the minutes stated. In addition, Federal Open Market Committee members indicated a restrictive stance of policy may well become appropriate depending on the evolving economic outlook and the risk to the outlook. The May 3rd through 4th session saw the rate setting FOMC approve the half percentage point hike and lay out a plan starting in June to reduce the central bank's $9 trillion balance sheet consisting mostly of treasuries and mortgage-backed securities. That was the biggest rate increase in 22 years and came as the Fed is trying to pull down inflation running at a 40-year high. Market pricing currently sees the Fed moving to a policy rate around 2.5% to 2.75% by the end of the year, which would be consistent to where many central bankers view as a neutral rate. Statements in the minutes, though, indicate that the committee is preparing to go beyond there. All participants reaffirm their strong commitment and determination to take measures necessary to restore price stability, the meeting summary stated. Quote, to this end, participants agreed that the committee should expeditiously move the stance of monetary policy toward a neutral posture through both increases in the target range for the federal funds rate and reductions in the size of the Federal Reserve's balance sheet, it continued. On the balance sheet issue, the plan will be to allow a capped level of proceeds to roll off each month, a number that will reach $95 billion by August, including $60 billion in treasuries, $35 billion for mortgages. The minutes further indicated that an outright sale of mortgage-backed securities is possible, with notice of what happened of that happening well in advance. The minutes mentioned inflation 60 times, with members expressing concern about rising prices even amid confidence that the Fed policy and the easing of several contributing factors such as supply chain problems combined with tighter monetary policy would help the situation. On the other hand, officials noted that the war in Ukraine and COVID-associated lockdowns in China could exacerbate inflation. At this post-meeting news conference, Fed Chairman Jerome Powell took the unusual step of addressing the American public directly to stress the central bank's commitment to taming inflation. Last week, Powell said in a Wall Street Journal interview that it would take clear and convincing evidence that inflation was coming down to the Fed's 2% target before the rate increases would stop. Along with their resolve to bring down inflation came concerns about financial stability. Officials expressed concerns that tighter policy could cause instability in both the Treasury and commodities market. Specifically, the minutes cautioned about, quote, the trading and risk management practices of some key participants in commodity markets that were not fully visible to regulatory authorities. Risk management issues could give rise to significant liquidity demands for large banks, broker-dealers, and their clients. Still, officials remain committed to raising rates and reducing the balance sheet. The minute stated that doing so would leave the Fed, this is bullish, positioned later this year to reevaluate the effect policy was having on inflation. So this is kind of what I've been saying here on this channel for the last 3 to 6 months now. It's essentially saying that, hey, the Fed needs to get rates up. They need to do it faster than what the markets were expecting. This was back when we were only talking about 0.25% rate hikes, like 3 or 4 of them throughout the year, right? This was back in January. I was saying this. And they have to get rates up so much because typically when an economy, the American economy, starts to decrease in value, GDP starts to go down, you go into a recession, what the Fed does is they cut rates to stimulate growth, right? Pretty straightforward. But in this time, you had growth slowing down at the same time the Fed was raising rates. Typically, that does not happen. Typically, growth is very good when the Fed goes to raise rates. So they have to act more aggressive. And then later throughout this year, in the second half of the year, they can essentially stop raising rates as aggressively and actually start to take a look at where the economy is. And that is the bullish part. It's kind of giving us a deadline to this to a certain degree of when we can kind of expect the Fed rug pulls to stop. So it really looks like that last line, after all, might be what the markets pay attention to tomorrow, and it could give us that after effect, that digestion style rally. Well positioned later this year to reevaluate the effect policy was having on inflation, aka look at what's going on in the overall economy and see if we need to stop doing this. Because kind of what I've been saying for the past couple of days now is, the Fed's trying to raise rates to get inflation down, which is all fine. But what is really hurting families the most, it's food and energy cost. And the Fed cannot control that. So sure, other things going up besides food and energy suck. But the biggest things that are actually hurting American families, they can't do anything about. So it's giving this a timeline to go off of, and we have seen an incredible amount of pain to start the year so far, with the NASDAQ down over 26% year to date in the first 5 months. It's absolutely terrible what has happened out there to pretty much everyone's portfolios. It's saying, hey, you're probably okay buying long duration growth stocks at this point. So I would imagine, obviously not a guarantee, I'm not a fortune teller, but I do think tomorrow could be a substantially positive day based off of this. And I think this could actually help solidify that 380 level on the SPY was actually a bottom. Now, let's talk about Sofi stock, and Sofi is up about 5.28% today, and it has been positive for pretty much all of the day. And like I was saying, I do think you are going to see a bounce, especially in long duration assets, a lot of long duration stocks. And if you guys don't know what that means, is essentially stocks like Sofi you're buying today, which are going to be much bigger companies into the future. That is a long duration. It takes time for those investments to actually pan out, right? So if, like I said, you get a deadline to the Fed and you have long duration assets that are now extremely undervalued, you can see a substantial rally. And that's exactly what I'm looking forward to with Sofi stock. I'm not a fortune teller, right? I don't know exactly if it's going to play out like that. But for Sofi specifically, they're at a very important level, right? You're basically at your 50-day moving average. That is the level of resistance we have seen so many times in the past. It's textbook at this point. We even, failed to actually close above it right here. That was May 19th, and then we actually did close above it on May 20th, but then we fell right back down the next day, falling about 3%. And ultimately, by the end of that day, we broke out above we actually did close under it as well. That's my mistake. So we have not closed above this 50-day moving average at all in a very long time. So if we do get a big rally coming tomorrow, potentially to close out the rest of this week, that's going to be a very good sign if we can close above the 50-day moving average. Now, if we do take a look at the option activity that is going on for SoFi stock at the current moment, go ahead and pull up option activity. You can see one order totaling $100.19,000, positive order value of 100%. Lots of puts and lots of calls that are heading onto the option chain, but by and large, you are seeing more bullish activity than not on SoFi stock here today. So that is definitely a good thing. Over the past week, 26% positive order value, so not such a good thing right there. But we do know the short interest is very high, sitting at about 18.5%. Current shares that are sold short of 134.76 million. Cost of our max at about 11.66%. So it's very expensive to get your hands on SoFi stock to actually sell short, right? You need to see a pretty big drop to the downside to actually make it worth your while. So I don't think a lot of people are actually shorting the stock today, but there's a lot of shares that are currently out on loan. For reference here, the short interest, 18.52%. So those are, shares that are actually sold short already, while the free flow out on loan is at 30.38% with 221.08 million shares that are out on loan. So substantially more shares that are out on loan that have not been sold short yet. And I think these shorts probably are just waiting for more fear to come back into the markets, to come back into long duration stocks like SoFi. And I don't think we're going to get that based off the FOMC report. But after the rally is done, then I do think that means that we will see a lot of shorting activity, and they will push us back down. But even in a short-term rally here, I do think $10 is not off the table at all. And that's kind of what I'm expecting. That would even put us back to really like where we were last month in April. We were sitting at about $10 per share. So I don't think it's too unrealistic right now to think that we could get a $3 rally to the upside, but we'll see. We'll see exactly how things do play out. The RSI is neutral right on 50, and that is right on the neutral level. The MACD is extremely bullish still, and especially after today, once we head into tomorrow, it's going to look even better. So I do think there's a lot of positives going for us, not even to mention the earnings that were very good and the insiders that have been loading up on SoFi stock. It's the best sign you could ask for at all, is to see insiders buying. And look at Anthony Noto just going crazy, buying as many shares as possible. This guy cannot get enough SoFi stock. Look, 37,000 shares that were purchased yesterday, 27,000 shares that were purchased May 20th. And to see insiders buying this many shares, like literally buying the dip as much as they can, it's one of the best things, if not the best thing, that retail investors or any other investors could see happening, right? Because you want to see the insiders buying shares. That is a good sign. They know what is happening with the underlying business more than anyone else. And especially the CEO, Anthony Noto, he's not a dumb person. He's not going to throw money away, right? Like, you guys wouldn't throw money away if you were running a company that was dying. Would you sit there and just continue to plow money into them? Especially when you're in a market environment where even if you're loading up on your own stock, it's not pumping the stock. They're buying a shit ton of shares. Sorry for my language there if you got kids that are also listening, but it's not pumping the stock. There's no incentive to sit here and put millions of more dollars into your SoFi position at this point, unless you had a lot of long-term belief in the company and you've seen good numbers coming out. Now, at the same time, you do have a new partnership with On Deck, and they did announce a new strategic partnership in initiatives to increase small business equal access to working capital, and they did list SoFi in that. So it does say On Deck, part of Innova, today announced a growing list of strategic partnerships, including SoFi Technologies and Lending Tree, specifically aimed at helping small businesses around the country. These partnerships bring together best-in-class digital lending products and fintech offerings with On Deck's artificial intelligence and machine learning ML experience, giving small businesses more options for obtaining effortless access to working capital that supports their growth. So I'm not sure exactly how much of an effect this will have, but it's a good sign that SoFi is, going out and making, partnerships, so on and so forth. And that's obviously a good sign for the business. as a whole. So overall, to really wrap up this video, I am very bullish on SoFi here in the short term, as well as ultra bullish for the long term. I've said it a million times and I'll say it again. I truly think this is a 10x stock. I think this is a 70, 80, 90, $100 billion market cap company in the next 5 to 10 years. And that's how I treat it. I buy and I hold. I do like to trade options sometimes on SoFi, on other stocks as well, when there's a lot of opportunities, and I've been doing very well over there. So if you guys want to get access to all my trades in real time every time I buy SoFi, or just support the channel, whatever the case is, link down below in the pinned comment for the Patreon. That is your way to support the channel and hopefully, you know, get some access into why I am thinking a certain way, why I am going out and making XYZ trade that I am. And if you want to grow your knowledge, you know, with options trading as well as just all the stocks that I'm buying for the long term, that is your way to do that. Linked in the pinned comment. Get yourself free stocks with Webull, Moomoo, and Public. I believe right now Webull is giving out 6 free shares when you sign up and deposit $1 into your portfolio. So definitely check that out if you guys have not already. Thank you guys for watching. I will see you in the next one.